Hey guys, what's up? Zach Calhoun here. Hope you're having a great day. In this video, we're going to talk about how to evaluate or place a value on your RV park or your future pro forma RV park that you're building right now. Okay. So commercial real estate is evaluated differently than residential real estate. We're not doing price per square foot. We don't care what the market rates are, price per square foot. What we care about in commercial real estate, in RV park space or storage, etc., is cap rate. We want to know what is a property's value based on its cap rate. Okay, and the way you determine cap rate is a simple mathematical equation. The way you determine the RV park's value is by taking your NOI, so the net operating income, and dividing it by a cap rate. So in certain markets, there'll be higher cap rates. In certain markets, there'll be lower cap rates. If you're an RV park owner and you own an RV park and you're wanting to get it priced out and you want to get it evaluated, you want the lowest cap rate possible so that the price can go up. Because as you punch in these numbers into your calculator, you'll notice that the lower the cap rate, or the lower the market is willing to pay, or the lower the cap rate, the more the market is willing to pay. Essentially, what you need to know is NOI divided by cap rate equals the value. Okay, so you can quickly determine, okay, if we make $200,000 this year net operating income, if the market's going to be willing to pay 8 caps, then I'm going to divide $200,000 net operating income divided by 0.08, press enter on your calculator, and boom, you get the $3 million valuation, or whatever the number is. I'll probably need to pencil it out, but basically that's how values work. It's a simple way to do a quick back of the napkin calculation of what you're looking at. Because if you're shopping around different RV parks, you'll see it will post a cap rate. What's that mean? It's 11 cap. That's amazing, right? Well, is it amazing though? Because we don't actually know if there's a reason why it's so high. Maybe no one wants to buy it. Maybe it's in a horrible location. Maybe that's why the price is so low based on the income it's currently making. So if the commercial property is valued by its income, okay, the next kind of force on that property is what is the market doing now. That's what a cap rate's goal is. It's kind of an arbitrary number. Now, a lot of cap rates are 6% to 11%. That's a wide range. RV parks usually trade at higher cap rates than, say, your apartment complex or a self-storage facility. So you're looking at 8, 9, 10 caps on RV parks based on a variety of factors. If it's a super nice park, you can probably lower that down even more. I know from experience that my father had an RV park that they sold it at 6 cap, right? And it was in a great location, and there was some room around it to expand, so he got a better deal, got more money for less of a cap rate, right? Or more money, based on for less of an income, basically. So you can quickly figure out based on that back of the napkin calculation. If you want to, well, you can even use 10 cap as well as a quick lower, the lower value, 7 cap a little bit higher, and if things go really well for you, maybe you get a 6 cap valuation for your property. At the end of the day, property is worth what a buyer is willing to pay for it. And they're going to reference cap rates. They're going to reference what's your NOI, and they're going to want to look at it and really hammer those things home. But the reality is, if the buyer wants it, they'll make an offer, right? So to make things more attractive, if you lower the price of the property, the cap rate will go up because there's more income. So that it's just how that calculation works. So, in summary, how you place a value on a property is just NOI, so the operating income divided by the cap rate number. So I would probably expect a nice RV park traded at 7 cap, 8 cap, and a little bit more rundown parks traded at 11 cap, maybe 12 cap as well. So somewhere between there. I know it's a wide range, and I'm sure some folks are thinking, well, that's too wide of a range. Well, this is kind of a wider range, kind of a variable market. It's just the way the market is. If you're looking to buy an RV park and there's room to expand, and you see the opportunity to expand it, you're willing to pay a premium, a lower cap rate, because you see that what it will be worth. You will take on that risk and go develop. So that's how we look at it. We look at it as like this perfect number. I'm trying to buy it at 8 cap, and buy it at 10 cap, and then I'm okay with it. it's not always how it works if you're in the value add space. In value add, you're just looking for, hey, do deals exist nearby me that have actually room to expand? That's actually a much lower pool of options. So you get excited when you see one with some income and room to expand, and you know how to build it, right? That's kind of what you're looking for. A quick pro tip, especially if you're a new person, go download some O&M, some offer memorandums. Go to Crexy or LoopNet or these different sites and download the offer memorandum. Look at the income. There's no loan assigned or attached to these NOI numbers. It's just expenses, gross income and expenses. So if your gross income over the year is, less than $30,000 for an RV park, you're probably looking at a pretty good number. If it's above 40, maybe it's a little more expensive to operate and run for some reason. Try to figure out why that is. So whatever that expenses number is, you're able to really easily figure out from the gross income minus expenses. That's basically your net operating income. That is your NOI. So there's no, we're not talking about the loan in place with that. That is over here, doesn't make a difference. So in the future, when you look at, okay, if I have 20 spaces now and I add 30 spaces, it's kind of like what we did, and it's a total of 50 spaces, and I'm able to go from an income of $80,000 to $225,000 a year. What's the value increase I'm able to bring in? And that will be ultimately how we determine our RV park valuation, how much it's worth. So hope this video is helpful. The best thing to do is take your calculator, play with it some, take some incomes, divide it by cap rates and see what it's worth, and see what the market out there is also posting as well. That will get you some values really fast. Hope this is helpful. Always work with a licensed appraiser. Don't message me. All right, see you soon.